We had the same board of directors from when we listed in December of 2011 through until, with only one change, through until our AGM in October of last year. James Jackson, our new chairman as of last Wednesday, and Mark Stanton joined the board in July of last year. They shadowed the long-standing directors in David Crombie and Peter Housden, who retired at the AGM. So we went from 6 directors back to 4. And then at last Wednesday's board meeting, Steve Paget, who's been the chairman of the company since 2002, who announced his retirement at the AGM last year, stood down from the board, and we appointed another new director, Bernie Campbell, who I found out only about 2 minutes ago went to school with Brian. So I'm going to be able to get some dirt on him. So, and he is chairman of the Remuneration Committee, so it might be quite valuable. So when there was just one other person, or 2 other people I'd just like to acknowledge that are in the room. Alistair Drake, who's our financial controller. He makes Andrew Evans look good. He does all the hard work, and Andrew just sits upstairs and puts little presentations and so on together. And an old colleague of mine who right back when we started the company, Craig Duncan, who's up on table 8. Craig, good to see you. Craig was right back there when we started and was a very trusted ally for many, many years. So talking to Cliffo the other day, what will we talk about? And what I'm not going to do is drag you through a boring presentation. We did our roadshow last week. Those that are interested in the financials and all that sort of stuff, it's all out there. You can have a look. We will touch a couple of the highlights in a minute. I've got a little list here. I'm not going to read it off rote. So Brian gave a little bit of a background on me, and John said I should give you a little bit more. And you're not going to like some of it. I was born in New South Wales. I do support New South Wales in the state of origin. I do support the Reds in the rugby. And most of you will know that Alliance are a significant sponsor of the Queensland Reds, which has actually been a really good sponsorship for us. Whilst we're a business-to-business wholesale organisation, we don't have a retail brand. Not a lot of people know about us, which we're very happy about. In aviation, it's always good to be out of the news rather than in the news, and that's I think we've come a long way by just adopting that mantra of just being a wholesaler. So you know what, we often we're at functions and so on. They say, "Who do you work for?" and say, "Alliance Aviation." No one's heard of us. So in those humble beginnings back in 2002. We bought from Ferrier Hodgson the shell of Flight West, which is a company that I had worked for 10 years, had a blue with the owners, told them they were going to go broke, left and went to Ansett, which is a great career move. 18 months later, Flight West went broke. It was a very significant part of Ansett's Queensland and Northern Territory network. And Ansett installed me as the sort of interim general manager under the tutelage of PwC, who were the voluntary administrators. And then, of course, 3 months later, Ansett went broke itself as a result of inept management by a whole bunch of people over the preceding 70 years and a shareholder in Air New Zealand that couldn't afford to keep Ansett afloat, which was a pretty sad time for a lot of people. But the one thing about the aviation industry, it does bounce back. And it provides opportunity. We assembled a little group of 4 people. And it sounds like a joke. It was 2 Aussies, a Kiwi and a Pom. And we are all still shareholders in the business. So we ran the business as a private company right up until 2011. And of course, when you're growing like that, you do eventually run out of capital. And we had lots of shareholder loans in. The business was going well. We only made 1 operating loss since we've started. As Brian said, it's a bloody tough industry. It's very capital intensive, and our growth over the years from originally 2 Fokker 100s to a fleet now of 75. They are all on our balance sheet. We don't lease anything. The only things we lease is land from from the rapacious monopolistic airports. If there's any here today, I'm sorry if I've offended you, but I mean it. And if there's one group of companies in Australia that should be governed by the ACCC, it's airports. Just to give you an idea of how expensive airports are, I'm going on a fishing trip next month. We're going from Darwin across to Kununurra and return. The airline that operates that is Air North. We lease them 5 E190s. Whilst they're a competitor, they're also, we're friendly with them, of course, and they're giving me a free ticket, but I've got to pay the taxes. So a return ticket, Darwin to Kununurra, the taxes are $190, and that goes to the 2 airports. So you think for the first $200 of a return airfare from Darwin to Kununurra is the first $200 goes to the airports. The EBITDA margin of Darwin Airport in the most recent financial year was 80%. Right. And you wonder why both colours of government won't regulate airports. It's an appalling state of affairs. But anyway, that rant is over. Just to sort of finalise a little bit of nonsense about myself. So I grew up in a little town called Wauchope. For those that know New South Wales, it's just west of Port Macquarie. Nice little town, and built on timber. Our family company was the biggest supplier of timber to BHP. And both my grandfather and my father, who actually worked for BHP, was an industrial chemist until his father brought him back to Wauchope to run the sawmill. And that went along very swimmingly until about 1973 when a company called Zinc Rio Tinto Australia knocked on the door. They had a big sawmill operation not too far from Wauchope, and they bought our family sawmill. And because typical Pommy versus Aussie, the first thing they did was shut down our sawmill because we supplied BHP. Typical. So, and then eventually I was very fortunate to go to school in Sydney, went to Sydney University. As Brian said, started with Peat Marwick. The Pacific Island division of Peat Marwick back then was run out of Sydney. God knows why. And as Trevor Franz, who's our investor relations manager here, we were commenting last Friday after our roadshow at Ryan's Bar, which is just below Australia Square, which is the only building called a square that's actually round. That's where I first started. I was there for a week before I was transferred to Honiara in the Solomons, and I spent 3 years there, which I learned a lot. You don't learn anything at university, as you all know. You learn it in having real life experience, and I certainly did that. And that's where I got into aviation. So it's been a long haul from there to here. I'm just going to go through a quick sort of highlights of our. You can see that. That's just the highlights. These are all just slides straight out of our presentation. I'm not going to go through it in any detail. What I do want to talk about is the 4 revenue streams. It's the main body of what I want to talk about. So we have 4 revenue streams in the business. It's FIFO, fly in, fly out business, our wet leasing, which I'll talk about shortly. We then have just our ad hoc charter, which Brian talked about earlier. And then we have our aviation services, which is a fairly significant and growing part of our business. So in terms of FIFO, what is it and how does it work? We have long-term contracts with the big mining houses. One of the reasons that the ACCC ruled against us being taken over by Qantas last year was that we had too big a market share. So you get penalised for being too good, and that's just wrong in my view. Our shareholders would have been handsomely rewarded for their patience. So long-term contracts with the big mining houses that can ride out the waves. I'll talk about a negative on that shortly. Those contracts are private in that they do not allow the general public on. So if you're all mining contractors for BHP and you're in Perth and we fly you to a BHP iron ore mine, you get on flights where the general public don't get on. And that's why we were able to be very successful during COVID. we were able to operate additional flights for BHP, keep everyone separated, and we didn't have one transmission of COVID. That worked really well for us. As Brian said, we actually made a lot of money during COVID, which we reinvested straight back in the business and started buying E190s, which I'll talk about at the end of the show. Those contracts are effectively fixed term. Their minimum is 3 years, maximum is 10, and we do have one perpetual contract. Rise and fall each month, so we don't care what the fuel price is, we don't care what the exchange rate is, and there's a CPI element, and I'll talk about costs that are above CPI shortly, because we did flag that in our presentations last week about industrial relations, which we're all pretty passionate about, and which is a growing issue in this country, and clearly the current government will not be tackling it, they're only making it worse. So that's our fight, what we do with FIFO. So in our contract book, you've got your BHPs, Rios, Glencore, so all the big mining houses you've ever heard of. We have operating bases in Cairns, Townsville, Rockhampton, Brisbane, Adelaide, Perth and Darwin. So we've got Australia covered. Wherever there's mining, we are. Clearly, we don't have an operation in New South Wales or Victoria because there's very little mining there apart from coal in both places. So that's the FIFO side. The wet lease. I'm sorry for the person from Virgin. I couldn't get a photo of a Virgin aeroplane to put there. But we operate 30 aircraft on long-term wet lease to Qantas. And we've got about 8 aircraft equivalents that we're operating for Virgin here in Queensland. A wet lease is also called an ACMI lease. So we own the aircraft, the crew are ours, the maintenance is ours, and the insurance is ours. So it's called an ACMI lease as well, same thing. Those are long-term, can be short-term. We do provide those operations for some of the Pacific carriers if they've got issues with capacity or planned maintenance or unplanned maintenance. We do that. And we also provide some of those services to Air North. So essentially we get paid an hourly rate. We don't take any load factor risk, and it's the same with FIFO. So we get paid that hourly rate, which just chugs through our P&L, and we retain some of that. And it's good cash flow. It's good profit, and it's without a lot of risk because the people who wet lease us pay for the fuel, they pay for the marketing, the catering, all the ground handling, all that sort of stuff. So we don't have to do that. Our job is to rock up with a safe aircraft and operate it on time. It's as simple as that. Now that sounds simple, but it's bloody difficult when you've got 75 aircraft spread across the country. You've got 1,400 staff you've got to control. You've got weather, mechanical issues. You've got to deal with airports that are less than helpful. And then all the regulatory burden that sits over the top of that. So that's wet leasing. Then we've got ad hoc charter. That's not hard to explain. As Brian said, we particularly during the COVID, we basically Australian sport would have ground to a halt. Just saying to Cliffo, one of the state of origin games played in Adelaide, you might recall, and we flew the New South Wales team in from Mascot Airport and returned them to Bankstown Airport and landed at Edinburgh Air Force Base in Adelaide. And the reason we landed there was that there's a curfew on Adelaide Airport, so we couldn't guarantee that we'd get the New South Wales team out of Adelaide and back into Sydney before we couldn't get back in before the curfew, so we can land at Bankstown so long as it's not raining. And fortunately that night it didn't rain and we were able to return the New South Wales team back there. And of course there's no curfew here in Brisbane, which is great. And the Air Force were very nice in letting us use their runway. So that ad hoc charter, we have not been able to do a lot of that over the last few years, which is unfortunate because it's very high margin. It fills in the weekends when we don't do a lot of flying. And we're only just now getting to a point where we've been able to satisfy all of our wet lease commitments, all of our FIFO commitments, and we're just building some reserve capacity. And it's that reserve capacity which we sell really on Friday through Sunday. So, and most of those things, Ross, it's sporting teams. There's a serious side to it. Last week, for example, with the floods, we flew a lot of people up to North Queensland. We do a lot when there's fires, bushfires, floods. We do a fair bit with the military as well. We will be shortlisted to operate for the Commonwealth during the election campaign. Whoever knows when it is, can you let us know? Because we've got a lot of planning to do if we're successful in doing that. So it looks like late April is firming as the date. And don't ask me who I want to win, you already know that. So the final revenue stream of significance for us is aviation services. That's a sort of a leftover bucket of everything else. We manage 3 airports in Australia, one in Western Australia and 2 in South Australia for our customers. But the real revenue that's going to flow through that business, and has done over the last few years, and there's a very significant focus on that in this next half. We have been criticised for our debt load in the last little while. We went through all of our shareholders last week. None of them are overly concerned by it, but they are concerned to a certain degree. So we've listened to that story and we've heard it loud and clear. We have over the years acquired a lot of very valuable assets at very low prices. We buy when everyone else is selling. And so we've got a fair bit of inventory that we would eventually use, but with the dollar where it is down at sort of 63 cents, and there's a worldwide demand particularly for aircraft engines. For those that have followed us for the last sort of 18 months, you will have heard us talk about the Pratt & Whitney issue. There's 3 large engine manufacturers in the world: Pratt & Whitney, Rolls-Royce and GE. Our fleet, our Fokker fleet, has Rolls-Royce engines, which are a very mature and very robust and reliable engine. The Embraer E190s have a GE CF34, which is again a very robust and reliable engine. Pratt & Whitney have come out with an engine called a geared turbofan, which reduces fuel consumption by 30%. But on 650 aircraft worldwide, it's reduced by 100% because they're grounded. So around the world, there are 650 aircraft grounded because the engines are stuck. If you think about that, close to home, Air New Zealand have 6 aircraft grounded. And it's not just Pratt & Whitney. Rolls-Royce have got some issues, and GE have got some issues with the new engine that they've developed. And to tell you how serious it is, Air New Zealand, who I rate as a carrier, I think they're very good. They recently took delivery of 2 brand new 787s, flew them straight to Alice Springs, removed the 4 Rolls-Royce engines from them, shipped those across to Auckland, and fitted them to 2 aircraft that were already in service. So that's how short of engines the world is. And we just happen to have a fairly significant surplus of engines that are coming out of an aircraft deal that we did 2 years ago with a company called AerCap, which is the largest leasing company in the world. So we've got a bucket load of engines that we're about to sell, and which will realise a lot of cash and B, a lot of profit. And so watch this space. So that's in our aviation services. Just another deal, which is of slight interest, I would think. We've sold 6 aircraft out of that AerCap deal to a company in Ireland called Airtrade. We've sold them the airframe, so just the fuselage. We're flying those aircraft across to just west of Dublin, removing the engines, the undercarriage and the auxiliary power unit, which we retain, and that we'll retain that for our own use or for sale. And we're going to leave them up in Ireland because most of the demand for these goods is in Ireland. So we're going to have a fairly big stock of spare parts up in Ireland that we're going to be realising over the next 18 months. So that's the aviation services side. I just want to talk about a couple of negatives. You're all familiar with the nickel, what's gone on with nickel. Nickel West was a significant customer of ours in Western Australia. We used to do 24 flights a week for them out to Leinster and Mount Keith. We're now down to 7. Those mines are in care and maintenance. But the way it works over in Perth is that the slots at Perth Airport don't belong to anyone other than the mining companies. When I say belong, it's a nominal ownership. But Nickel West, because it was the first big fly-in, fly-out operation in Western Australia, had the best slots. So whilst we've lost that flying for BHP Nickel West, BHP Iron Ore have taken up those slots because they don't want to lose them. That's the 5:30, 4:45 slots in the morning. So a lot of the loss of revenue and flying from BHP Nickel West has gone to BHP Iron Ore, and we've been able to place a fair bit of that capacity with other people. We've still got about, I think it's 20 or 30% to go, but we'll absorb that over the next little while and grow our operations elsewhere. The other negative is industrial relations, which we had a slide on. I'll flick through to it. I won't bore you with it, but some of you who read The Australian may have seen some comments I made yesterday. I'm not going to get any Christmas cards from the trade unions, but we had our first ever industrial disputation in September last year. It was ugly. I grew up in the era of very ugly industrial relations, and the new legislation that came through at the end of 2023, supported by Jackie Lambie and David Pocock, what they've done there is just unbelievable. I won't bore you with it, but it's put us in a really adverse position. We called it out in our presentations. It's affected our share price in a negative way. We've resolved most of our industrial agreements. We've got the next big one to go is our pilots in Perth, who are absolutely deluded. We have paid CPI since 2002. Most companies have paid 2 or 3%. We've paid CPI even when it was 7.8%. We gave our staff a 7.8% pay rise. So we're up to date, and yet they're claiming 30% pay increase. They're just not going to get it, and we'll take whatever action we need to take to ensure that we protect the company's best interests, and that is not by handing out 30% pay rises, whereas some of our competitors have. It's a horrible situation. Anyone that comes to talk to you here or that you invest in that's not talking to you about industrial relations is deluded. It's a real and significant issue. It won't be an issue in the federal election, I don't think, because the last time the coalition did that with work choices, it didn't work out so well. But it's something that has to be dealt with. You can't go away out giving big pay rises, winding back conditions that make you less productive, and then saying that the productive capacity of the country is increasing. It's just nonsense. You're all smart people here. You know what they're saying is nonsense. Just a general comment on the aviation industry. You all know the big players and their quality carriers in Virgin and Qantas, and that's also the Qantas Group. But the company called Rex has been getting a bit of news recently. And just to go back a little while before we get to where I think we stand as an industry, Rex was given nearly $300 million during COVID to stay afloat. Alliance was given naught. So it's something we're very proud of. We didn't rely on government support. So Rex, having been kept afloat by the coalition government, basically used a lot of that money to go and set up in competition to Virgin and Qantas, and clearly it failed spectacularly. Always going to. And of course what happened there is they took the eye off the regional carrier part of their business that frankly was a very good operation. They've now, it's obviously being propped up by the Commonwealth Government. Regional operations are basically state-based. I don't see why the Commonwealth Government's involved. There's certainly no votes in it. If you think about where Rex fly in Western Queensland, you'll know all the passengers' names out in Western Queensland because there's not a lot of them, right? I think there's 16 ports out there that they fly to under Queensland state government subsidy. I don't see why the Commonwealth's involved. There's half a dozen really good quality regional carriers in Australia, most of whom you've not heard of, who, given the opportunity, would grow into those Rex routes and do a damn good job. And Stuart, our CEO, who's on the board of the RAAA, that's very much the Regional Aviation Association, which is our peak industry body. That's very much the view that they are taking, and it's one that I support wholeheartedly.